Hello everyone, and welcome to this educational presentation where today I'm going to talk to you about powerful short-term setups that last really only 3 to 5 days. Now, a lot of traders like to switch over to short-term setups when the market has an increased volatility, when there's lots of things going on, and when there's actually too much risk involved. So they'll say to themselves, I'd rather trade something short-term where I don't have to hold a position for possibly a month or so, maybe only a couple of days, or probably they want to switch to options, something of that nature. So there's a lot of different ways to apply this method, which I'm going to reveal to you today. The only trouble is the reason why most traders switch to short term and why they have difficulty is because they are not able to discern what the short term trend is. Now, for example, if we look at this chart here in ASML, someone looking would say, okay, yeah, we have a short-term uptrend, but we're meeting some type of resistance. We're overbought. It's up far too high. So now is the time to exit this. So you say to yourself, sure, the short-term trend is up, but the short-term trend is just about to switch and change over. And then you wait for a little confirmation, and the next day you see that, lo and behold, it actually did hit a little bit of resistance there in your mind, and it's starting to go lower. So you don't want to miss this opportunity. So you're saying to yourself, well, the short-term trend has now decided to go lower, so I will sell and go with it. Maybe you buy some puts, or maybe you actually short the stock if you have enough money there for a $500 stock. Either way, you don't like the equity, and then this happens, right? Okay? The reason is mainly you're not in sync with the short-term trend. And so what I'm going to be revealed to you today are many of the rules and different ways and aspects in which to trade this strategy where you would not have had a sell signal at all. In fact, on that very same day that you thought you were going lower, you would have had a buy signal, according to this method I'm going to teach you today, and potentially captured 68 points in just 3 days. So this is a very powerful method, perfect for these short-term opportunities. And if you have difficulty learning strategies and methods like this, well, ProTrader Strategies and I developed the PTS Primo Charting platform to make it simple. Everything is one click away, and you can identify these short-term setups and really get in sync with the short-term trend. So welcome once again. My name is Stephen Primo. I'm the president and founder of Specialist Trading. I've been trading for roughly 44 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Now, my background is really in short-term trading because when I was making markets in about 60 stocks on the floor of the exchange, you would literally buy something and hold it for maybe a matter of minutes, a little bit shorter than 3 to 5 days. So I understand what it means like to be trading for short-term, and this is a perfect method to do that. Now, there's one thing I have learned in 44 years of trading, and that's most traders have a very difficult time following their own rules. So this is why most traders really like to follow someone else. Excuse me. They would rather take their signals or their cue from someone else, someone in a chat room, someone on TV, maybe even someone in a webinar, rather than make their own decisions. But if there's one thing I've learned, only traders that have some type of longevity and that have sustained their career are the ones that make their own trading decisions. So that's why we formulated Specialist Trading, so that we can provide you with all the things I've accumulated in 44 years to help you make your own decisions. You won't have to rely on anyone else, and you'll be in charge of your own trading destiny for the very first time. That's the purpose and the philosophy behind our company. Now, before we begin today's class, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results and show you a lot of slides with this method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future, and please remember all examples are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. If you'd like to get some more education on a daily basis, I post different things from strategy signals and the reason why a lot of these signals were generated to little bits of financial wisdom that I've accumulated along the way. So lots of great free education on a daily basis. So please feel free to follow us on Twitter. Now, as I stated, we are first and foremost an educational company. That's our sole purpose, simply to educate traders. So if you come here today thinking I'm going to tell you what I think the market's going to do, is it topping out or is it getting set to go much, much higher? Or if you think I'm going to tell you what the perfect stock is to buy or the perfect stock is to sell, or even if you think I'm going to tell you what the perfect time frame is, you've really come to the wrong place. See, a good educator doesn't do that. A good educator supplies you and provides you with this information to help you make your own decisions. So once again, my goal as a teacher is simply to educate you and to teach you how to trade, to make your own decisions with the specialist edge. Same edge that was taught to me some 4 decades ago, and which has sustained me, and hopefully I'll be able to do the same for you. Now, this is a class today. I want to take each and every one of your questions, but I have a lot of slides to share with you, a lot of different examples. If we stop for every slide, we'll be here far too long. So please, if you have a question, wait till the very end. Now, we're recording all of our presentations, so many times you can just watch the video as often as you like to answer your questions on your own. So there's a lot of different ways to get this information, but we will supply you with a link to this recording. Okay, with that said, let's begin today's presentation. And the method I'm going to be talking about today is strategy number 10. This is a fairly new method. It's, I believe, roughly about a year old. It's still new, but many of our methods we've been teaching for over a decade. But this is still fairly new, strategy number 10. So let me share with you some of the highlights of strategy number 10. It is our first and only trading strategy that is based on entirely short-term requirements. Now, if you've been a student of mine in any other of our courses, or if you've taken some of our classes or online classes, you'll know that we like to look at the overall trend a lot. And that's, the basis for trading. But we really don't focus a lot on short-term requirements because, let's face it, most people aren't intraday traders. But if you want to at least trade and hold positions for 3 to 5 days, you have to base them on shorter-term requirements. Because of this, there is no buy-sell line applied to determine the trend. If you've taken my courses before or seen my webinars, we usually apply our tool, the buy-sell line, to tell us what the overall trend is. Remember, the overall trend is a little bit longer term, so we're not even going to use that. We're going to use an entirely different tool to determine what the trend is. Now, this is a combination indicator and pattern-based strategy. Now, most of our strategies are either one or the other. They're either based entirely on some type of indicator or different indicators and their relation to one another, or they're based on a pattern that repeats over and over again. This is one of the few strategies we have where we're combining both of those different concepts, so it's entirely different as well. Now, most trades are designed to last anywhere from 1 day, being the minimum, obviously, to 3 weeks. So most trades will fall somewhere in between there, okay? This makes it perfect for trading options. Why? Well, because, as option traders, you're not holding on something. Usually option premiums are high, and you don't want to buy something way out of the money and hold it for months and spend all that extra cost in premiums. So if you're going to be holding something very short term, this is perfect for option trading. Now, we also have 2 different ways to trade this. If you're an aggressive trader, meaning you don't mind taking on a little bit more risk and you don't mind getting in as quickly as possible, you can trade the aggressive version. If you're more conservative, you'll pick your spot as where to enter. You'll pick your spot as to how much risk you want, and you'll also pick your spot for exiting as well. Now, you can apply this to offset long-term investments. We know a lot of you don't really specifically trade shorter-term methods, and that's okay. And you like to trade more longer-term, anywhere from swing trading to actual investing. Well, if the market does decide to turn, or if the market goes against you with a particular equity you have, this can help you offset it by doing something more short-term to capture those short-term gains, while possibly in your longer-term investment portfolio you're losing. Now, with all of our methods, we have a certain level of consistency, and we pride ourselves on that. Now, I know most of you think consistency means that, well, this makes money all the time. It's very consistent in making money. But actually, the true definition of consistency is an awareness of losses. There's absolutely nothing wrong with having losses. Strategy number 10 will produce them from time to time. That's okay. But what a consistent method does is that it recoups those losses. So that's what we're more interested in. I know a lot of webinars you may have attended or courses say, oh, this has been back tested in research. We never lose, or we've only had 1 loss in the last 10 years. Well, we don't believe in that. There's nothing wrong with losing. What's wrong is when you don't have a method that's able to recoup those, when you go into a long, sustained drawdown. So we don't want to do that with our strategies. So for this reason, we're really proud that our methods are very, very consistent. Okay, so let's talk about this process, the strategy number 10, short-term setup process. Now remember, I can't divulge the rules because this is actually one of our simplest methods to date. I believe it only has about 3-4 rules tops right off the bat. I don't want to divulge them, and I can't do that. I'll share with you the process and share with you the indicator that is applied in one of the set of requirements. But I just can't go into it. All I can tell you is that everything is given in the course, and you'll get a fair idea of how to apply this and what it's based off of by looking at a lot of the examples I share with you today. Okay, so remember, it's based on short-term requirements. We're not going to use the buy-sell line to tell us the overall trend. So how do we know what the trend is? Well, we apply the PET-D. This is our short-term tool for defining the short-term trend. Let me share with you what I mean here. The PET-D is something that I acquired on the floor of the exchange. At that time, we called it the formula because it was something we had to calculate on a tick-by-tick basis. What we've done now, with the help of programmers and high-speed computers, is we've developed it into a color bar algorithm. And what it does, its sole purpose is to translate on a tick-by-tick basis what the market wants to do. And it does this, it translates to us by showing a display of color bars. For example, as we see this example here in AMT, obviously the short-term trend is down, right? But then what happens when it switches? Well, the PET-D is a color bar tool. It colors bars red when it is generating a short-term downtrend. It colors the bars green when it translates that and that we're now in a short-term uptrend. So once we apply it, we see here how it gets us in sync with the short-term trend. Now, remember, its sole purpose is to translate, but it doesn't predict how high or how low something will go. It doesn't pick tops and bottoms. It doesn't generate signals. It's simply a translator telling us, better than any other tool I've ever used, what the short-term trend is. Here's another example, older example in Aetna. Obviously, someone looking at this would say, well, Steve, the short-term trend is up. Okay, well, then what happened to the short-term trend? You see, this is what usually happens with traders. They get in just when it's too late for the short term. But if you applied the PET-D, you would have known well in advance that the bars were green, and you would have known well in advance to get out when the bars turned red. So as you see here, as it says, in my over 4 decades of trading, the PET-D is the best tool I've found for capturing the short-term trend. So this is what we're going to be using. Instead of the buy-sell line, we're going to be using this to determine what the short-term trend is. All right, now later on in the process, here's how we determine buys. Now the method identifies a shallow pullback. A shallow pullback is simply a little small sell-off in a short-term uptrend. And this could be a 1 to 3 day pause or a sell-off, as we see here, in a short-term uptrend. Now the way we're going to determine sells is by identifying a shallow pullback. Once again, it's a 1 to 3 day pause or a bounce in a short-term downtrend. So this is all we're looking for. We're looking for a small little bounce if the market is going down in the short term. If the market is going up in the short term, we're looking for a small 1 to 3 day sell-off. That's it. Okay, we do this by combining the PET-D with a pattern and to identify all these specific little setups. Okay, so let's look at strategy number 10, process in action. Remember that chart we showed you at the very beginning of today's presentation in ASML? Remember, most traders would look at this and say, well, Steve, I follow overbought, oversold oscillators, plus I follow the institutions, and this is hitting some major resistance. We're overbought here on the short-term trend, so I think I want to sell, right? Because you don't want to go against the institutions. So, okay, heaven forbid, they're always right? So when you see a confirmation where it does start to go down, that's where you would normally jump in and sell. Here's what we want to do. Our process is totally different. We don't rely on outside sources like institutions, like earnings, like what somebody's saying in a chat room. We don't believe in those things. What we rely on is the chart in front of us. It's the market we're trading. That's the very source of everything we're getting our income from and everything, right? So that's the only thing we listen to. So we need our translator. What is our translator saying? Is this the beginning of a downtrend by coloring the bars red? Or is it still in a short-term uptrend? Well, all you have to do is click on the PET-D Fast on our platform, and we'll see what the colors are. And as we can tell, on this day that most traders would have sold, the PET-D translator is saying, no, we're still in a short-term uptrend. Even though we closed lower on the day, we're in an uptrend. So this is not a selling opportunity. This is actually a buying opportunity. But we have to check our rules now with strategy number 10. So we teach you all these rules. This is not a black box. This is not a systemized type of method. It's a strategy that is based on rules and then allows roughly about 25 to 30% room for discretion, meaning your personal insight, where you'd like to enter, where you'd like to exit, where you'd like to place your stop. Remember, everyone is encouraged to make their own decisions. This is not a system where everyone enters at the exact same place, everyone exits the exact same place, and everyone places their stop. I mean, that's silly. That's trading like a robot. That goes entirely against our philosophy. We want you to be in charge. Therefore, you'll never have any statistics at specialist trading because that would require everyone to trade the same. And we don't want to produce robots. We want to produce individual traders. So you know the rules. You know what is the basis for a setup. In order to check your work, you would click on strategy number 10 on our platform. In the drop-down menu, click on signal arrows because that's going to produce and generate an arrow where a valid signal is. So this is how you check your work. And you're right, that's a buy signal right there, okay? So we know that we want to go long. If we decide to do so, we can choose to buy at the close. We can place a limit order. We can wait for it to trade above. There are several different ways to trade this. It's up to you. Either way, that would have been a great decision because potentially you could have captured 68 points in 3 days. You see, this is why most traders fail when trading short term because they're out of sync with the short term trend. So if you have a tool that's able to translate what the short term trend is, and then you add a little structure in the form of the requirements and the rules and the pattern for strategy number 10, you really have a high level of consistency. Now, this can work to the downside as well as we look at this older chart in DAO. All right, most traders would say, well, sure, Steve, this is going down, but I think we're going to bounce. Why? Well, this is major support, okay? The institutions are all buying here. Remember, they're always right. And on top of that, I took that $5,000 class on candlesticks, and this is a bullish engulfing pattern. So I have two positive things here telling me to go long to buy, that we've hit some type of a short-term bottom, okay? Sound familiar, right? This is the way most traders make their trading decisions based on outside sources that, if not used and applied properly, really have minimal chance for consistency. We're not saying, you know, there's anything wrong with bullish engulfing patterns or candlestick patterns. In fact, we have a specific strategy that is based on candlestick patterns. But you have to know how to use them correctly. And in our opinion, this is an incorrect way to apply it. The first thing we want to do is check for the short-term trend. What is our translator telling us? Is this the beginning of an uptrend? Is it starting to paint the color bars green? So we click it on, and actually, this is where you wanted to buy, right? So let's reference it. Click on the pet D, and what is the translator telling us? It's telling us that the short-term trend is down. Now you see here, there are a number of days where we were up, and they're outlined red. So these are just up days that are still in an overall downtrend. And here we have one more. So there's no way this should be viewed as a buy. This is, you know, we're in a short-term trend. You never want to go against the grain. You never want to swim upstream. So right off the bat, we'd say, no, I'm not going to buy that. But then secondly, we want to check our work. So we click on strategy number 10, click on signal arrows, and we'll see that there are actually 3 signals that were generated. Now, the last 2 haven't done much, but the first one, you have a nice little profit there, but still not a big move. Sometimes you have to wait a little bit longer, but as you can see later on, the stock went down 17 points, okay? So do you see how our translator can really help you? And then you add a little structure in the form of the rules of strategy number 10, and you're really elevating your chances for consistency. So let's look now, and also if you miss those, look at the more signals that were generated. Now, I don't want you to think just because it's an up day with a red that that's a sell signal, because we had an up day here and a sell signal wasn't generated. There was another up day here and a sell signal wasn't generated, and still another one here, there was no sell signal. You have to meet the certain requirements. It's not just enough for you to have an up day and then have it outlined red. Okay, so let's look at some strategy 10 signals that last 3 to 5 days. These are fairly current in the last month that you could have taken advantage of if you were a student of the strategy number 10 course. All right, here's an example on ADI. All right, we're only going to look at 2 bars here. That's all you need, because remember, we're looking at the short term, and someone looking at this would say, well, obviously, we got to buy this, right? But then look what happened. Okay, we start to go lower, and you say, well, you know what? I think the short-term trend is going lower now, so I'm going to get out of this, all right? Or else I'm not going to buy this after all. It's starting to look weak. The market's starting to scare me, so I'm out of this, okay? Well, what is the translator telling you? Once you apply the PET-D translator, it's telling you that the last 2 days, even though they've gone lower, we're still in an overall uptrend. So let's add some structure. Let's add the rules to the method. Click on strategy number 10, signal arrows. And guess what? The last 2 days have actually been buy signals. Now, nothing much has happened here, all right? Especially after the first signal, you bought and it went lower. But if you use proper money management and our stop placement, you'd still be in the trade and potentially could have captured roughly about 7 points in 2 days, okay? Not a lot, but still a quick little trade, or before you may have lost 7 points trying to sell it. How about this example in ULTA, all right? We had a really nice, slow, steady upward move, and then look what happened. Some news or something happened, and we're starting to bounce up. So we didn't really go much lower. I think we're in a short-term uptrend, right? But what is the translator telling us? Click on PET-D, and it's saying, actually, we're not in a short-term uptrend. Even though we've been steadily headed higher, all of the bars have either been colored or outlined red. And we have a number of up days, but they were all outlined red. So there's no reason to even think that this is going higher until we have some confluence with green bars. Now we add the structure of strategy number 10, click on signal arrows, and guess what? The last 2 days were actually sell signals. So you could have sold right here in the mid to end of March, 20 points in 3 days. Not a bad little trade, right? Could have purchased the puts or maybe had some type of option spread with a bias to the downside. Here's another example in CDNS. Okay, we're only looking at 3 bars here. Even though nothing much has happened, the short-term trend is up because all the bars are colored green. We have a couple of down days here. We apply strategy number 10, and the last day is actually a buy signal. This is why we say this is really perfect for option trading, because many times you will have buy signals that close on down days. And this is a preference for option traders because the premium now is less. You're going to have to spend less money to purchase an option. And plus, you also have the extra added advantage of knowing that most of these trades don't last very long. You could have potentially captured 10 points in just a couple of days. Here's another example of REGN, expensive stock, but still, as we can see here, we have a nice bounce. But what is the color of the bar that closed up on the day? It's outlined red. So even though we're up on the day, it's outlined red. I know a lot of people have trouble with this concept because they say, well, Steve, I thought up days are supposed to be colored green and down days and candlesticks are colored red. Remember, that was something that was developed by the West when they introduced candlestick trading to the Western community. And when people didn't understand how to look at candlesticks. They couldn't grasp the concept. They were used to open, high, low, close bars. And then when you see these open bodies and closed bodies, they're saying to themselves, what does that mean? I mean, where do we open? Where do we close? So in order to have the westernized traders understand it better, they said, I know what we'll do. When we put it on our platforms, if it's a down day, we'll color the bar red. If it's an up day, we'll color the bar green. Okay, so this was totally fabricated so that people could understand it better and they could market it. But if you're looking at traditional candlesticks, they were never used this way. An up day was called a hollow body. Okay, as you can see here, the body of the bar is hollow, and the down day was black or colored in black. Now we've applied the PET-D, and the reason why we use the hollow body the traditional way is because you can see even in an up day, it's outlined red. So this is telling you that it's similar to having a day in winter. All right, imagine, every time it's winter, say sometime in January, every once in a while, I live here in the West Coast, we'll have a day where it gets up to 80, 85 degrees. And everyone will say, wow, I guess winter's over. And it'll last for maybe a day or two. And then by next week, we're right back down to 50 degrees. Well, this is the same concept. Every once in a while, you'll see a big up day like this. And everyone will say, wow, that's it. The trend is going to go up now. But what is our translator telling us? No, it's telling us that this is actually just a bounce in a short-term downtrend because the bar is outlined red. Or, similar to the weather aspect or the metaphor, it's simply a hot day in an overall or short-term winter month. So it's easier to understand that. And if you apply the strategy to this, you'll see that a sell signal was actually generated. Would have been perfect to buy some puts for this at the high here because the price would have been much cheaper. 17 points in 2 days. So what happened to that bounce where it looked like the downtrend was over? This is the beauty of the PET D. It's translating on a tick-by-tick basis what the market wants to do. And even though you may have a bounce, it's still telling you the short-term trend is down. All right, here's another example on Facebook. Okay, this was in the last month, the middle of last month, about 3 weeks ago. It was steadily heading higher. We had a couple of down days, but the down days were colored green. This is telling you that even though they closed lower, the trend, the short-term trend, is still up. Now you apply strategy number 10, and you see a buy signal was generated here. 31 points in the next 6 days. Sorry, we went a little bit over our 5-day benchmark there, but if you had stayed in one more day, you could have potentially captured 31 points. All right, let's look at TTWO, take 2. Looks basically like the stock is doing nothing, right? Just going sideways. But if you apply the PET D directional tool, you'll see that all the bars have been colored or outlined red. This is telling you that even though it looks as if nothing is happening in this stock, the trend is down. And once you apply strategy number 10, you see there were actually 2 sell signals generated. If you had taken advantage of both of those sell signals, you could have potentially captured 27 points in just 4 days. Let's look at Adobe, all right? Now, someone easily could have said, wow, we've hit some major resistance here. This is probably the top. It's probably best to look for this to go short. But even when you had these 2 down days, the bars were colored or outlined green. So once again, if you want to use the weather metaphor, if it's still hard a concept for you to grasp, imagine in the middle of summer, in the middle of July or August, when it's the hottest, sometimes you'll get these days where it's 50 or 60 degrees, and you'll say to yourself, wow, I guess summer is really ending very quickly. And then by next week, you're back up to 90, 100 degrees. This is the same concept that we're looking at right here in Adobe. Someone would say, wow, I guess this rally is over in Adobe. But since the colors are still green or outlined green, this is just a 2-day sell-off in a short-term uptrend. And a buy signal was generated here on March the 25th. Coming into April, you could have potentially captured 36 points in just about a week. And if you missed that one signal, guess what? There was another one right here where you could have captured roughly a little bit more in just a couple of days. All right, here we have Lulu. Now, Lulu's been going lower, but for all intents and purposes, most people would say, well, you know what? It looks like we're hitting support. It looks like it's kind of trying to make a bottom here. But what is the translator telling us? The translator is saying that all the bars are red. Don't get involved in all these traditional ways of trading that are supposed to tell you what's going on when they actually have no high levels of consistency. Things like support and resistance, like earnings, like economic indicators or economic reports. I stopped using those things 4 decades ago, okay? They really don't have high levels of consistency. The best thing, in my opinion, is just learning to listen to the market through our translator. So you apply the PET D, you see right here we had a cluster of sell signals. This was coming in the beginning of March, and potentially in Lulu you could have captured 32 points in less than a week, okay? As we look at LRCX, we have one red bar, but that's not enough to tell us the trend change because all of a sudden the bars turn back to green, and then a buy signal is generated. Now, even though it looks as if it's rolling over, the bars are green and the rules have been met, the requirements have been met. So had you bought that, potentially you could have captured 90 points in 5 days. You think you would have done well buying some options on this? This just happened just a couple of weeks ago in March coming into April. And as we look at Tesla right here in mid to end of March, we see once again it had a nice opening, went higher, closed lower, and the bars continued to be red. A sell signal was generated, 75 points in 1 week coming into the end of last month, March, just a week or so ago. Now, I know a lot of people are saying, well, how do we know where to exit? This is great, Steve. You say I could make maybe 90 points, maybe 75 points. Well, where do I get out? Well, we have, once again, upwards of 6 or 7 different exit methods in the course. We have also upwards of 6 or 7 different entry methods and 6 or 7 different stop placement methods. Remember, you're in charge. What we do with the strategy is highlight these high probability points that show that a move is most likely to happen. It's up to you to decide how you want to enter, how you want to exit, and how you want to place your stop. Why? Because you have to become in charge of your trading destiny if you want to become a consistent trader. You know, trading is not about just saying, hey, well, I'm just going to go to that website and see what they like and I'll copy them. You know, this guy must know what he's talking about. Or I'm just going to listen to this guy on TV after the market closes and see what stocks he likes or what he thinks of the market. That is a recipe for disaster. I tried doing that 44 years ago, and I can't tell you how much money I lost trying to do that when I didn't know what I was doing, okay? My mentors said the same thing, and they were teaching me these things. They said, Steve, we don't just want you to copy what we're doing. You have to make your own decision, and that's how you become a consistent trader. So what I'm going to share with you is just one of those exit techniques, okay? I can't divulge the rules, but I'm just going to show you how this comes with the course. For example, in Apple, here's an older chart in Apple. Here's a buy signal that was generated. As you can see, all the bars are green, and on this one little day sell-off, a buy signal was generated. Now, here's one of the exit methods that is automatically produced on our platform. You have 4 different points of exiting. If you're the type of trader that likes to get in and out quickly, you would choose exit level 1 or 2. If you wanted to get a little bit more bang for your buck, you would choose exit level 3 or 4. Okay, we go into detail the value of each one in the course. Now, let's say we chose to get out at exit level number 4 because we really felt strongly this move was going to go up. And we were right. In about a week, we would have made about 9 points. We say, hey, that's not a bad little trade. We had the options. We had a number of options. We made some good money. So you exit. Look at the value of this technique. See, that's the beauty of our techniques because they're really consistent and many times, not going to guarantee, but many times they'll get you out at the best possible place. For example, here's another older chart in Microsoft. A buy signal was generated. You see the pet D color the bar green on a down day, and the rules were met in the strategy. Now, prior to even entering into the trade, you can find out where these exit levels are. You can decide for yourself where you want to exit. Had you once again chosen the extreme exit, the level number 4, you could have said, okay, I'll enter on the next day, let's say, and I'll exit at level number 4. You place your limit, you place your stop, and you just simply wait. You know, if you're trading correctly, it's actually very boring. It's like fishing. If your trading is crazy, if you're calling up the phone, if you're calling up your, platform support, or I should say tech support, if you're having, 5 or 10 screens in front of you, that's not really trading. That's more of a gambling mentality. But if you're trading properly, it's actually very boring. And that's the way it's supposed to be. You just sit and wait. It's like fishing. So let's say you entered, you placed your limit order at 229.85, you placed your stop somewhere, and you just wait. Well, in 4 days, you had a nice 17-point gain. And then look what happened after that. Now this works to the downside as well. Here we had a cluster of sell signals in QDEL, okay? Nothing much happened for a week. So, a lot of times it may take a little longer. Remember we said the minimum is 1 day. The maximum is roughly about 3 weeks. In this case, you would have been holding on to this for a week or so. But ultimately, you would have seen that, now I really feel strongly. I'm going to place a limit down here. And look what happened. Could have potentially captured 72 points in just 2 weeks, okay? Took a little longer than 3 to 5 days, but if you held in there long enough, many times they go to that 4th level. Not promising, but this is really one of our most popular exiting techniques amongst our students. Okay, so let's recap. What did we share with you today? Strategy number 10 is fairly new. It's about a year or so old, and it's the only strategy we have which is based entirely on short-term requirements. So how do we determine the trend? We apply the PET D. The PET D is actually a separate course in and of itself. If you gone to my webinars in the past, I've given full webinars just on the PET D and the value of trading with it and using it for dozens of different ways. So this is just one way to apply it. Then you apply the structure of the strategy. In other words, if you're looking for buys, you're waiting for a shallow pullback due to this pattern. And this is a 1 to 3 day pause or sell-off in a short-term uptrend. If you're looking for sells, well, the short-term trend is down. That means the bars are red, and you're looking for a shallow pullback, which is a 1 to 3 day pause or bounce with the bars being red, using this specific pattern, okay, that we teach you. And that's it. But that's the beauty of this short-term strategy, a very, very popular strategy we have amongst our students. So ask yourself, do you think this short-term strategy, strategy number 10, could help your trading for the remainder of the year? Remember, you could use this to offset some of your longer-term methods. You could use this for option trading. There are a number of ways to apply it. I just shared with you about a dozen examples that were generated within the last month, some within the last couple of weeks. Okay, so these signals are happening over and over and over again. All right, we have a great discount for all the attendees today. I want to share with you what it is. Obviously, we're going to give you strategy number 10 at a deep discount. Now, you're going to get this entirely new strategy, and this applies the PET D along with it. It's our combo indicator pattern-based method. You're going to get the complete course rules for entering, exiting, stop placement, and money management. You'll also get all the complete course rules for the aggressive style of trading as well as the conservative style of trading. Remember, if you're an option trader, this is a great strategy to have trading options, okay? Now, we're not going to just stop there. Remember, everything you saw today was displayed on the platform. You saw how simple it was to apply the PET D. You saw how simple it was to apply the up and down arrows for the strategy. Everything is one click away. We made it simple on purpose so that teaching you how to trade this would be simple. Well, we're going to throw in 12 months free. Okay, this is roughly about a $2,000 value. We're going to throw that absolutely free on top of the discount with strategy number 10. Now, this really is worth its weight in gold because there are so many more options and things included on the platform. Now, obviously, you're getting the PET D and strategy number 10, but you'll also get our strength of trend feature that determines if a trend is running out of steam or not. It can help you stay in a trade longer or get out. Another thing you're getting are over 90 of the most prominent technical indicators plus personalized tech support. But let me share with you what I feel are the most valuable things on this, okay? That's our signal scanner along with the automatic exit levels. Now, let's say, for example, you use the scanner and you scan through, let's say, the stocks, let's say about, I would say a while ago, this was in letter W, and a buy signal was generated here, okay? Now you say to yourself, well, I'm not sure I want to take this, but let me check where these exit levels are. With one click, all of a sudden the exit levels will appear. And you can say to yourself, okay, I've done my research. I've learned the rules to the strategy. I've been watching the stock, and I think it's going to get up to the 4th level. So I'll place a limit to exit there, buy the stock, and I'll use one of the many different stop placements and then money management to track the trade if I want to, okay? So once you apply all that, you sit back and wait, and in 1 week, you could have potentially captured 40 points. Got right up there, all right? Now, this is where students get a little cocky. They say, wow, I could have made, if I made 40 points in 1 week, maybe I can make 80 points in 2 weeks. But remember, the 4th and final exit level of this particular method is often the best place to get out because look what happened later on, okay? So that one-click access to that exits, to the entries, and to the PET D is all there on the platform. And you're getting that, a full year of that, absolutely free, along with dozens of other tips, techniques, and methods on the platform that I just don't have time to go into right now, okay? All right, so you're getting this, strategy number 10, the short-term trend trader, and let's break it down. Now, normally, if you purchase with the PET D and strategy number 10, this would cost you close to $5,000, okay? And if you include the full year of the platform, we're talking about $7,000. Well, we're not going to charge you anywhere near that. Let's take off $500 and only charge you for the PET D, for the 12 months of the platform, and for the actual course, $44.95. Now, the best thing about this is we realize if you can't come up with $44.95, that's okay. We have payment plans available. So for a small deposit, you can still be up and running and have a monthly payment. You can be up and running as early as today. Now, we know a lot of students are already members of the PET D alone course. So let's say you already own the PET D. Well, normally that would cost $34.95. We'll drop that down altogether to only $29.95 for strategy number 10. These are some great, great discounts. Also, remember, includes 1 full year of the platform. Remember, 12 months free. This would normally cost you about $7,000, And if you want to place a payment plan for a small deposit, you can still be up and running without having to come up with the full amount. Here's how to take advantage of this. Contact Pro Trader Strategies. All right, I developed the courses with them. I also developed the platform. They're in charge of tech support as well as pricing and discounts. They're very flexible. They would be happy to work with you on pricing. They'd be happy to establish a payment plan with you. I would suggest, you can email them, but I would suggest the better position to take would be to call them directly at area code 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to discuss a payment plan with you, and there's no obligation at all. You can call them up and get an estimate, and they would be happy to work with you. The only thing I would suggest is you would not sit on this offer because, once again, we have students that do this from time to time. They'll wait a couple of weeks, maybe a month, and say, boy, my trading has gone nowhere since I went to that webinar. I think I'm going to take advantage of that offer and use one of those payment plans. Well, by that time, this offer may go back up to $7,000. So if you're really serious about taking your trading to the next level, and if strategy number 10 can really help you, contact Pro Trader Strategies. I would suggest giving them a call. They would be happy to give you some type of estimate. There's no obligation, once again, and they'd be happy to discuss that with you. Now, that link you see at the very bottom is the link that will take you to the information page. And it'll also, if you want to sign up online directly, you could do it on that. It's not a live link, so you'd have to copy and paste that onto your browser, okay? So I'm going to leave all this information up here, and I said I would take any of your questions. If you have any questions, go to your question and answer portion right now and type them in, and I promise I'll try to answer them to the best of my ability. Oh, you're very welcome for my time. My time is here to teach you, Vita. You're more than welcome. Thank you for attending. Someone is also asking in the on the pricing page, you said educational correspondence. What does that mean? That's probably one of our most common questions. People think that they have that I'm going to be able to fly or drive directly to their home and sit next to them. But we do the next best thing. You get my personal email address, and you can email me and contact me whenever you'd like. Every day I do my best to answer as many emails as possible from our students. We have students around the world in over 115 countries and in every state in the United States. And all of them at some time or another have sent me emails asking me questions about how to apply this specific method, or is this the correct way to do this? And so this is what we want. This is what we mean by educational correspondence. So we don't want you to think that once you become a course member that we're just going to throw you to the wolves and say, well, thank you and good luck. You're always going to be a student of mine, and you can contact me whenever you'd like. I answer emails over the weekend, sometimes in the middle of the night or in evening time. So it's always good to have questions. Okay. Long says, excellent presentation. Really appreciate it. You're more than welcome, Long. And these are all students or people that have attended my webinars before, and so we always try to teach you something, at least in our presentations. I know I've gone to webinars before in the past where a lot of the so-called educators really don't teach you anything about concepts or about trading. Everything is basically just a lure to get you to purchase their $10,000 program. But even if students decide not to become a member of the course, we at least try to share with you some of our concepts about how we feel about becoming a consistent trader is by not following anyone else, by making your own decision, by being in sync with the short-term trend, and things that are really part of the makeup of specialist trading. So we at least try to teach you these concepts, maybe to open up your eyes to a different way of trading. Okay. Can this be applied to intraday trading? Yeah, you can apply it, but just remember that the smaller time frame you go, we have some traders that like to trade 5-minute bars, and that's fine. You will get some good signals from time to time, but I personally would suggest using this on anywhere from an hour to higher time frame, because once you start going lower, there's a lot of noise and a lot of back and forth with the trading, and they call that whipsaw market or a noise market, and you won't get the same type of results. So I would say use it on an hourly time frame and higher, but don't go lower than an hourly time frame because you won't get the same results. Okay, this is really meant for hourly time frames and above. You can use it with weekly bars. You can use it with daily bars. In my opinion, it works the best with daily bars. Okay. Okay, great questions. Any more? Yeah, someone's asking about the link. Yeah, I'm sorry we haven't posted the link on the chat box, but all you have to do is either write that down or copy and paste that link onto your browser, and you'll open up the information page, and you can sign up online if you'd like. Once again, if you're thinking about it, but the price may be getting in your way, remember, specialist trading and pro trader strategies are now offering payment plans. So if you can't come up with that lump sum for a small deposit, you can still be up and running as early as today. Our tech support will contact you and upload all the information on your desktop. You'll have the platform, you'll have all the strategies, you'll have the pet D, and you'll have my personal email address where you can contact me with any questions. That can be as quickly done as today if you'd like. So, make a resolution to take your trading to the next level. Contact Pro Trader Strategies. There's absolutely no obligation. They would be more than happy to answer any questions you have. So as we close, I just hope you learned something and saw probably our best short-term method in action. Remember, all the examples I just shared with you were very recent. Some were just a week or two old. And most especially, though, I hope you learned a little bit about our concepts and what we feel will make you a consistent trader. Now, as we take one last look at our disclaimer, I just want to say thank you for taking time out of your Wednesday to come hear me speak today. And most especially, I look forward to all of you becoming a student of mine in the Strategy Number 10 course. Thank you so much. Have a great day, and I'll see you next time. Bye-bye.